The market's been closed for 2 hours. It's Wednesday, January 13th, and it is time for the weekly swing trading video. If you take a look at the chart of the SPY, you can see how we've got a nice gradual channel to the upside. The slope is not very steep, so this move could continue for quite a while. What I would be looking for out of this type of formation ahead of earnings season is a breakout to the upside through the upper end of this trading channel. I believe that's possible. We've got $500 billion worth of stimulus coming in the form of stimulus checks. That certainly would add a lot of liquidity to the market. I think that you could see a nice big breakout, perhaps up to SPY 390. 400 is possible, but boy, if we get to 400, I think we're going to see a very steep, swift round of profit taking to knock the market back down. We still have a lot of dark clouds looming on the horizon, but there's also fear of missing out. We've got a really nice rally taking place amidst all of the uncertainty. So I don't think we're going to get the Q1 rebound that everyone's looking for in terms of the economy. Coronavirus, very stubborn. Most experts agree that the vaccinations are not going to have a material impact on the spread of the virus until probably May or so. That means that we can expect a sluggish economy. We saw job losses during the unemployment report last week when job growth was expected. ADP came out very negative. This is not a great market backdrop, especially when stocks are trading at a PE of 40. Very, very rich by historic standards. So good news is priced in. I think that banks are going to disappoint a little bit. We got JP Morgan announcing on Friday. We've had banks running really, really hard on the notion that that stimulus check is going to go into bank accounts. It's going to be used to spend. So that will be good for the credit card side of the business. But the big backdrop for banks is that low interest rates are going to prevail for a very long period of time. Very hard for banks to make money in that environment. Also very difficult when you're starting to see job losses, bad debt write-downs start to increase. So the crux of what I'm telling you is that I think that banks are not going to rally on the earnings. I don't think that that's where the catalyst comes from for the market rally. However, most of the tech giants have actually benefited from coronavirus and stay-at-home workers. So there's going to be a lot of optimism built into those numbers, and I believe that is what could fuel the market rally through the upper end of this channel. Until we get that, I would expect just to kind of grind back and forth, meander a little bit higher at a time. We don't have to worry about a big market pullback unless we get that melt up. Then we have to be super cautious, but it's going to be big. It'll be at least 100 S&P points, and you'll know it when you see it. If we run like crazy, I would suggest scaling out of your long positions and taking some profits because the backside can be very, very swift and very steep, just like it was here. Boom, 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 boom. We are off to the races. On this day right here, it looked like the sky was the limit. The next day, the bottom fell out, and that was just the first leg of the selling. So you can see bullish speculators get flushed out here. They think, oh, that's okay, the market will bounce. And then when it starts to really soften, that's the leg where they really get nailed. So we've got margin borrowing in dollar terms at an all-time high. That means investors are fully leveraged. We have the VIX at historic lows. That means there's no fear in the marketplace. Nobody's looking for a pullback. That's usually the most dangerous backdrop. The market's been riding the upper end of the Bollinger Band. You know all this. I've been telling you this for weeks. So the underlying theme is we can't be short the market. It's continuing to float higher. It'll probably continue to do so. We just need to be aware that if we get a melt up, we've got to be quick to take profits, and then we'll be looking for a backside. On a backside dip like this, hallelujah, we'll be looking to reload on our bullish put spreads. I think the market just needs some time, and when you get a melt up like this and a pullback, and then you get a retest, look at how much time this move right here consumed. That took about 3 months. Well, in 3 months, that's a quarter. Stocks can start to grow into their current valuations. The profits will start catching up, and the economic rebound should start to be noticed. and we should start to see signs of it. So that's what I feel is going to happen. We're going to buy time and start to grow into these valuations. The buying pressure has been fast and furious in certain sectors that are in favor right now. So we're seeing great intraday opportunities. But overall, time to be pretty cautious. So that's the market backdrop. And I wanted to make sure that all of you are using all the features within Option Stalker. If you're a swing trader and you like to do end of day analysis, there are fantastic searches that you can run. You know that I've been focusing on buy into earnings. If you just want to take a swing trade for a few days, you see that the market is grinding its way higher. You want to buy some stock, hold on to it for a few days. Here's a list that you can go right to each and every day. You can take a look at the stocks in here. Some of them have moved. I would not focus on anything that's gone gangbusters already. In fact, what I would be doing is if you see something that's been kind of waffling around and has not taken off yet, let's say that you're looking at this a week ago, you would start drawing lines right here. You draw an alert line, click GTC, double click on that bar. Lo and behold, APHA takes off. Okay, great. I've got an opportunity to buy a stock and hang on to it for a few days. I can go through this list and almost in every instance show you opportunities like that. eBay didn't just come on the list, it's been on the list for a while. So you've got a downward sloping trend line right here, broken to the upside, got the stock through the 100-day moving average. Looks pretty good. That's what you should be doing. I'll show you another opportunity right here. Netflix. If you're watching Netflix and you knew that earnings were coming up and it was on this list, what you could have done yesterday, if you watched it down here near its low of the day, you could have started to take a look at horizontal support here. You could have looked at the 200-day moving average, really nice horizontal support. I also have the 200-day moving average. Stock is pretty close to it. I could probably sell the 480, 475 bullish put spread, get a decent credit. Stock should find support there. Lo and behold, it's rallying and now it's above the 100-day moving average. Could you go into Netflix now and sell the out of the monies for anything? No, because this Friday is the last expiration before they announce. You can hover over the E and see that they announce on January 19th. This is a really good list. So go through, take a look at those sleeper stocks, drop your GTC alert lines. When it breaks out above the alert line, you'll get a pop-up when you log in, and then you'll know that that stock might be worthy of holding it for a couple of days into earnings, but do not hold over the earnings announcement. We don't do that. That is a crapshoot. And just a side note, if you are buying option premium, you always want that expiration date to span earnings announcements. You want that expiration to be after the earnings announcement date because those options tend to hold their option implied volatility and their time premium very, very well. If you are a seller of options, you want to make sure that your expiration date precedes the earnings announcement. You want those options to expire before the earnings announcement date. Here's another search, very easy, and this one's going to be better and better to use with each passing day. Strong after earnings. You can come in every day, take a look at stocks that are strong after earnings. WBA, classic example. Earnings announcement here, right there, before the open. You can see that the stock rallied, broke out to a new relative high, delivered on a silver platter. Stock has gone from $45.75 up to about $49. So nice little gain, really nice little gain in the stock. Make sure that you're using these tools. I'm going to show you some more tools tonight. First, we're going to take a look at our current positions, and then we'll take a look at our new trades and how I found them. So if you recall, last week we had a number of spreads that we were trying to put on. NIO was one of them, and you can see we're playing this breakout right here. We never had a chance to get in this one, unfortunately. Would have been a really nice bullish put spread, and we were leaning on that breakout right there. The other one we were not able to get into was Tesla. TSLA. Look at how strong that stock is. Don't just look at the credit spreads. Enter the trades through staged orders. If you are looking for swing trades, I have done the homework for you. Follow these stocks on Thursday, and if you can't get the bullish put spread done and the stock looks really good, buy some stock. You don't have to go crazy buying call options. Buy some stock. Hold it for a few days, and I think you'll be happy you did that. We were able to get in on some trades last week, so Tesla we were not able to get in on as well. AXP, we were able to enter. That's been a really nice one. There we are short the January 22 115 puts all the way down here, and we're long the 114 puts. Those will expire a week from Friday. It's a very nice looking spread for us right now. Could be our first winner of the year. J&J was another spread that we were able to get into. There we are short the 155 puts right down in here. The stock is pulled back a little bit, so not in fantastic shape, but not in trouble either. And I'm expecting to see it gain its footing, especially as earnings season draws closer. You can see January 26th is the earnings date. So as we get into next week, that'll put it within 1 week of earnings. I think that this stock is going to continue to grind higher. So I like J&J. I like the bullish hammer that it put in here today and closed near its high of the day. So again, we're short the 155 puts and we're long the 152.50 puts. We did that for a 50-cent credit. That trade's also looking really good. Sunday night, I sent you a video that had 2 trades in it. TXN was one of the trades. There we are short the 165 puts, which is way down in here. We were keying off of that breakout right here. You can see how we got a dip. That dip was enough for us to be able to get in on the trade. So we sold the 165 puts and we bought the 162.50s, and we did that for a 50-cent credit. Some of you didn't get filled on this trade, as I'm hearing, and I believe it was through Tradier that there may not have been fills. All I could do is go by what happens in my model account. I placed the trade Sunday night, just like everyone else, with Ameritrade. I got filled on the trade. So that's what I'm using as the model on how we do. Sometimes you might get filled with another brokerage firm, and I might not get filled. Sometimes I'll get filled, and you might not. Usually, when one of us gets filled, we all get filled. So this should not be a common occurrence. But in any event, we did get the Texas Instrument trade done. And we also got another trade off, and that was on SPOT. And there we were keying off of this downward sloping trend line here. We had a nice breakout to the upside, and that's what I was really looking at. You can see the stock is way up here. We are short the January 29, 325 puts, and we're long the 322.50s all the way down here. And I was expecting the open from this long candle to hold, and it's done so. So really nice looking trade right now. I think we've got 4 excellent positions on. We've got 3 positions that, if everything goes well, a week from Friday, we'll have our first 3 winners of the year, and then we'll have another spread that expires on January 29th, that being SPOT. But the main reason that we did these spreads was because they came up on our pre-earnings bull search. That's how they were brought to our attention. Then we started to take a closer look at these stocks. I don't want to do credit spreads on stocks that have gone parabolic. Those stocks that are overbought, they tend to correct very, very quickly, and it would be extremely difficult for us to adjust. That's why I'm looking for stocks that are just starting to break out, or stocks that are resting right above a major technical support level. So let's go in and let's run a search tonight, and I'll show you the new picks. So I'm going to bring up my custom search right here, and I'll show you what I marked. Obviously, as always, we'd like to have good option liquidity. So I have a value here of -1 to 15. Pre-earnings bull. February 8th would be the earliest date that I want to have for a company that is announcing. Why? Because I want to have at least 2 expirations that I can sell bullish put spreads on. So if the company's announcing earnings before then, I'm really not going to have much to choose from in my weekly options. I don't want to go out on the far end here. I've got February 19th selected. I don't want to go out into March. I want to keep it very close because I know that that bullish tendency will be the greatest as the stock gets closer and closer to earnings announcement date. So I have to keep that also fairly close. So I selected February 9th. So February 8th to February 19th, we know that the companies that are highlighted are going to announce earnings between that date, and we know that 75% of the time or more over the last 3 years, these stocks rally 2 weeks ahead of their earnings announcement date. So once they're inside that 2 week window, we have a huge statistical edge. This is the list of stocks that came up. And if you're watching this video, you can do a couple of things. I also marked relative strength. We want to have the stock strong relative to the S&P 500 on a daily basis. So if you mark these boxes and you run your custom search, you'll get exactly the same results that I have right here. Now I've done a little bit of the legwork for you. I've gone through and I've selected 4 stocks from this list. There are some other good picks within this list. So let's take a look at the first one, and we'll start from the bottom and work our way up here. First one is Walmart. I really like Walmart. I think that sets up well. Let's take a look at the daily chart on Walmart. And there you can see downward sloping trend line right here, broken to the upside. That's good. Now you've got a nice upward sloping trend line as well that we can lean on. Comes into play right around the 50-day moving average. We also have the 100-day moving average here at about the 144 level. That for sure we would like to key off of. So what we're going to do is we're going to be selling a Walmart bullish put spread with an expiration date of January 29th. And I'm going to be entering this trade along with you. So I'm going to be selling the 143 puts, and you can see the black line is the 100-day moving average. 100-day moving average. When I added it to the option chain, which there's a nice feature in the new edition of Option Stalker, when you scroll through the dark gray strike prices, those are monthly options. So if I go back here, you can see that red line is 1 standard deviation, blue line is 2 standard deviations. So statistically, mathematically, I have an edge because I'm 2 standard deviations out of the money. I also have the 100-day moving average that will lend support. I also have the 50-day moving average that will lend support. I also have an upward sloping trend line, which tells me that there is an upward bias to the stock. All of these things add to our probability of success. So I'm going to be clicking on the 143 put. I'm going to be clicking on the 142 put. And when I do a $1 credit spread, you know that I'm looking for a 20-cent credit. Now, if I do a 20-cent credit on this, I've got to put up 80 cents for it. And I'm using my model account with $1,000 per trade. So if I divide $1,000 by 8, that comes to 12 contracts, actually 12.5, but I'm going to be rounding down and using 12 contracts. So let's review the trade. Walmart, January 29th expiration. I'm going to be selling the 143 put. I'm going to be buying the 142 put. $1 between the strike prices. I'm going to be doing that for a 20-cent credit. I've got to put up 80 cents. I'm going to be doing 12 contracts. GTC. For all of our trades, if we are not filled by the close Friday, cancel the orders. We'll take what we can get, and I'm going to submit that trade. And there it is. So that trade is live. Now, the one thing that we need to do always is hover over the E and confirm what that earnings date is. Now, because I have it in my pre-earnings bull search, I should not have any issues, but it's good for me to know approximately when the company is going to be announcing. In the case of Walmart, they announce February 16th. So let's take a look at the next trade. The next trade that we're going to do is on NVDA. Take a look at that chart. There's a whole lot of nothing going on in NVIDIA, and that's actually okay because we know that heading into the number, this stock should have support. There should be optimism in this stock, and it has not taken off and gone super high, so I don't run the risk of a pullback into the number. It's nice and flat. These major moving averages, 50-day moving average, 100-day moving average, should be plenty for us to lean on. But we also have a really nice horizontal support line. 1, 2, almost 3, 4, 5, 6 touches right in here. This is a nice horizontal support level, right around that 510 level down to almost the 500 level. So that's what we want to lean on. So let's bring in the option chain. Let's enter symbol NVDA. And in this case, we're going to go out to the February 5th expiration cycle. Got to go a little bit further out in time because I want to give myself a little bit of distance. I don't have the upward momentum in NVIDIA that I do in Walmart or some of the other stocks. So best to keep my distance. So in this particular case, I'm going to be selling the NVIDIA 497.50 puts, and I'm going to be buying the 495 puts. So I've got $2.50 between the strike prices, and you can see that 497 comes into play below the low from this red candle. Below that, below that, below that. It's also below the 100-day moving average. I like this spread. I think this is a really good one. And you can see that this is currently 30 cents bid, legitimately 30 cents bid, offered at 70 cents. I think we've got a really good chance of getting filled on this spread at 50 cents. So, because I have 2.5 points between the strike prices, I'm bringing in a 50-cent credit. That means I need to put up $2 per contract. And if I'm using $1,000, that means that I'm going to be doing 5 contracts. Now, I should also mention, as the account grows this year, I'm going to be increasing my size. I'm going to be compounding it, but I have to wait for those option spreads to expire. Then, and only then, can I start to increase my size. So, we are doing that. I want to make sure I've got everything entered properly. So here is the spread. On NVIDIA, NVDA, we are going to be selling the February 5th expiration. We're selling the 495.50 puts. We're buying the 495 puts, and we're doing that for a 50-cent credit. Good till cancel. Submit. Order working. Again, mind you, if I'm not filled by the close Friday, I'm canceling these orders. We're just going to continue to be a moving target. Because we're selling premium within a 3-week window, we need to get filled on these right away or we want to move on and keep evaluating, 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 evaluating. That's how we've been able to make money. Last year was a phenomenal year. We're going to continue to build on that success this year. That is trade number 2. So let's continue the exercise here and get the next trade done. NET is the symbol. Well, what do I like about this? Well, I like this long trend line right here. And you can see visually, I'll also draw it in for you. I can connect that line right there with that line right there. And you can see nice upward sloping trend line there. Got a little bit steeper one if I come in here and up to here. But This is a great support level for us. It's the 50-day moving average. And we also have support right down here, downward sloping trend line, bullish flag formation. There's the pole, there's the flag, and you can see how the stock is continuing to move higher right now. I want to key off of that 72.50 level. We've got earnings coming in on February 11th, so I need to find an expiration before that. So, NET. Let's bring up that symbol. We're going to go to the the January 29th expiration. And we're going to go down to the 72.50s. We're going to click on the bid there. That means I'm selling it. And we're going to go down to the $70 puts. I'm going to be buying those. So in this case, we are selling the 72.50s, buying the 70s, and we're going to be doing this for a credit of, you guessed it, 50 cents. Now I'm going to have to put up $2 to do this. 2.5 minus 50-cent credit. I have to put up $2. So I'm going to be doing 5 contracts. And you can see that that spread is 31 cents bid, legitimate 31 cents bid, offered at 79 cents. We're pretty close. I think we could get filled on this spread as well. So let's recap it. Symbol NET, net. We're going to be using the January 29th expiration. We're selling the 72.50 puts. We're buying the $70 puts. We're doing this spread for a credit of 50 cents. I'm going to click submit. And I'm not seeing the order working for some reason. But I want to keep moving on. And I'm not sure why that is not submitting. But I'm going to come back around. I don't want to dupe the order, but I don't see it working right here. There I did just dupe it. So I'm going to cancel one of these. Easy enough to do. There. Let's get to the final trade now. I'm going to move this off screen. I'm going to put up symbol LYFT. Aha. Compression, compression, compression. I like this. I also like the fact that the stock was trying to poke through that resistance level. Would like to have seen a little bit better follow through today, but it's okay because that gives us a chance to get this spread done. We know that these stocks, every single one of them, like to rally into earnings. That earnings date is on the 9th of February. We have a very nice solid support level 1, 2, 3, 4, 5. Lots of touches right in here. 46.50 is a major support level. You can see this long green bar came on a nice big volume spike yesterday. I like it. I think LYFT sets up beautifully for what we're trying to do. So let's put the symbol in, LYFT. Bring up the option chain. And in this instance, we are going to go to the January 29th expiration. And I'd like to get below this horizontal support, which takes me to the $45 strike price. So I'm going to scroll down, go to the $45 strike price. I'm going to click on the bid there, and I'm going to click on the ask of the $44 put. I'm selling the 45s, buying the 44s, and we know that because there is a $1 difference in the strike prices, I want to get a 20-cent credit for this. Now you can see that it is 12 cents bid, offered at 50 cents, it's 12 cents bid on the spread, offered at 51 cents. 20 is bid side, meaning I think we've got a really good chance of getting filled on this one too. And I'm putting it in for 20 cents. If some of you want to try and put it in for a higher price, you can. I'm going to be happy with 20 cents. Now again, I've got $1 between the strike prices, subtract the 20 cents. I have to put up 80 cents for this. That means that I'm going to be doing 12 contracts. I would be doing 12 and a half, but I can't do half contracts, so I'm going to round down. So let's recap the trade. LYFT. I'm going to be selling the January 29th expiration. I'm going to be selling the 45 puts. I'm going to be buying the 44 puts, and I'm going to be doing that for a 20-cent credit. And you can see we're well below the standard deviations, 1 standard deviation, 2 standard deviations, and we've got major horizontal support that we can lean on. Plus, the stock has a tendency to rally into earnings. It's been compressing, and to me, this bar tells me that I think this stock wants to poke through and it wants to rally. So if you're running this search again and you're looking for your swing trades, you can put a horizontal alert line right here, GTC, click, got a horizontal alert line. Yesterday you would have been notified. This is a nice stock to enter into earnings season. That's how you run the searches, really easy to do. And those are our 4 trades. If you go to the staged order entry screen, you will see them there along with our other positions. So I'm keeping these up. There's Texas Instruments, SPOT, J&J, XP. You can see, hopefully, a week and 2 days from Friday, we'll have our first 3 winners. Spot looks good. And then we'll have another 3 of them for the January 29th expiration. Should be very good. Hopefully January will end on a really positive note for us and we'll have a bunch of spreads expiring worthless. We'll get that nice breakout to a new high on the S&P 500. There'll be plenty of optimism with mega cap tech stocks. That's the backdrop. That's what I'm looking for. I was going to show you another way to use custom search very quickly here. And what you can do on this, if you don't want to use the pre-earnings bull, but you want to find stocks that are super strong, but you don't want to be hampered by an earnings announcement date, is you can use this earnings date projected. So let's click on that and let's know that we don't want anything that's going to expire real soon. We'd like to sell, let's see, there's 1, 2, 3 expiration dates that we can take advantage of right there for put selling. So let's go and use the earliest earnings date would be February 1st. And after that, for this search, we don't really care because we're just looking for strong stocks. So here you could actually go out into March and it wouldn't really matter. So again, the premise here is show me a stock that's got a really good head of steam. And I don't want to be tripping and fumbling over earnings announcements. I want to have that stuff out of the way so that I can just focus on the stock. Okay, good. Well, obviously we want to find a stock with relative strength. Let's run that scan and see what we've got. Here you've got an awful lot of stocks that you can pick from. Okay, let's also add something else. How about heavy volume today? That's always good. Now we're talking. This is an easy list that you can click through to find some really nice trades. And there's a couple of stocks in here that I really like. One is ZM, and that's something that we traded in the chat room today, but it really pulled back. You could see how it had this huge spike up and it broke this downward sloping trend line. That was very encouraging above that 200-day moving average, but you might still be able to sell some bullish put spreads at that 320 strike price because it's not that far from it. Yes, you can look at it and say, well, this stock is at $364. It carries a ton of premium. But in any event, this is the type of search that you would run, and you can take a look at stocks that are strong, evaluate those charts, sell your out of the money bullish put spreads. See here you've got BYND, downward sloping trend line right here. I'd like to see a little bit more follow through, but yes, this is double bottom right in here. could be a decent bullish put spread. I like to focus more on stocks that have upward momentum, not stocks that are in a bottoming process. So these would not be my favorites. So you can add another criteria in here, and it might be show me a stock that is greater than its 100-day moving average, for instance, and that's going to further narrow the list. Now you know the stock's at least got some decent strength to it. And I noticed ZS today. I like this. So here you've got a downward sloping trend line right here. This is a bullish flag formation. Stock has broken out to the upside. You would want to be selling those bullish put spreads down here below that 185 strike price. That's all I've got for you tonight. I hope that those of you who are watching this on YouTube, I hope you stuck it out. I don't have any new trades for you, but at least you can see the process, the thought process that we go through, the technical analysis that we do to find these opportunities, and then the way that we structure these bullish put spreads to put all of the odds in our favor. It's marking check boxes and making sure that we have the highest probability of success. That's how this works. This is a very consistent strategy for those of you who are looking to trade options and you're just starting out. I highly encourage you to learn how to sell out of the money vertical spreads, in particular bullish put spreads, because the market's been in an 11-year rally. You want to focus on bullish put spreads right now. This is very, very consistent, and you don't have to micromanage the position. It's something that working professionals can do. You put the spread on, you have a stop in mind. I like to use stops on a closing basis, meaning the stock has to close below that stop. It can do what it wants during the course of the day. Then it's pretty easy. You really, most of the time, if you focus on stock selection, you don't have to do anything. You put the spread on, you can drop an alert line so that you know when you might be in danger on a spread, and then tick, tick, tick. You let time decay and probability work their magic. And then you consistently produce results. As you get proficient at that, then you can start to expand out into other strategies. Buying calls and buying puts is the most difficult option strategy in terms of making money on it. So you need to really have a lot of good market sense and a lot of good technical analysis to make that work. That's where most traders start, is buying puts and calls. Don't do that. Start with selling out of the money, bullish put spreads, get your probability really, really high. Start having some positive experiences and some successes that you can build on. Thanks again. I'm done for the evening. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. I'm going to have lots of great trades and lots of great education for you. Thank you. Good night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.